Thank you for joining us today. I'm Marion, and it's a pleasure to welcome Hebe Chen, Market Analyst at Vantage, as we delve into the market developments from the first half of 2025. From Forex and stocks to crypto, commodities, and beyond, Hebe will be sharing valuable insights across the board.
Thanks, Marion. It's very exciting to be here. Yeah, I think it's good timing as we moving towards the second half of the year. It's good timing to review the financial market and actually have a look back for the past 6 months, what we have gone through. And certainly there's a lot of things happening in the market that definitely will impacting all the investors as we moving towards into the second half of 2025.
Hebe, could you start by outlining some of the key developments in the first half of 2025 across major asset classes, such as stocks, Forex, crypto, and commodities?
Well, certainly, I think that it's definitely not overstatement saying that we have gone through a roller coaster ride in the first half of 2025. Well, looking at the volatilities everywhere, starting as you mentioned, from the stocks to Forex to the commodity and crypto market. I'll probably starting from the stock market. So if you just purely looking for the number point of view from the first 6 months, the Asian market turned out to be the outperformer. And we up to today, we're seeing the Hong Kong Chinese stock literally just enter into the bull market by up about 20% for the first 6 months. But if you're looking purely just from the April to June for the past 2 months, we do seeing the coming back of the US stock, the SP 500 up about 20%, Nasdaq up about 30%, just in such short period of time. And in the currency market, I think US dollar is definitely make the big headline this year. The US dollar dropping nearly 10% for the first 6 months. Of course, that actually push up a lot of Asian currencies, enjoy quite a decent gain in the first 6 months. And moving on to the commodity market, we do see the gold, the yellow metal, continue to shine in the first 6 months. The gold price has up about 30%, meaning that the strong appetite for safe haven asset remains quite steady in the market. But by contrast, is we're seeing the energy market, the oil price dropping quite significantly. Now we're seeing the WTI is now dropping roughly about 67, and the Brent crude is about 67, WTI is about 65, roughly down about 18% for the 6 months because the investors not quite confident about the economy outlook. And as you mentioned, crypto is another big highlight this year. The Bitcoin up about 80% this year is quite a robust rally. Also, we will see quite similar momentum in the other altcoins in the crypto world as well. So a lot of things happening in the first 6 months, which I do expect the volatility will continue into the coming months and even the years.
As we head into June, what should investors and traders pay close attention to? Are there any immediate risks or opportunities worth highlighting?
Well, I think this month will potentially be a turning point that in between the first 6 months and the second half. What we are already seeing is a lot of talking about the trade tension, which is still at the center stage, which why I think that everyone expecting they will flow into the July because we know there's a couple of deadlines sitting there. Apart from that is we are now seeing the monetary policies, especially coming from the Bank of Japan. The ECB just cut rates last week, and the Bank of India also surprisingly cut a quite sizable rates last week as well. So I think that will also remain on the center stage for discussion for potentially opportunities as well as risk. Apart from that, I think moving forward into the next 6 months, we also will seeing quite a lot of hard data for the economy as now the concern is definitely on rise about whether or not recession remain on the table. Not just for the US perspective, we do seeing the countries like Australia where I live as well as Japan, the economy data, the quite recent data are not showing quite a rosy outlook. So I think that from the trade tension, which is showing that reshaping the global trade dynamic, to the monetary policy, which will be quite largely focused on the central bank as well as the economy outlook. I think all these three key components will continue to be the major concern for this month, and definitely will sort of lay the foundation for what we are expecting into the next 6 months.
There's been growing attention on the clustering of high-impact events. Can you walk us through some of the 5 events in 30 days that could potentially disrupt global markets and increase volatility across asset classes?
Well, certainly, I think that I do expect a lot of things happening for the next 30 days, as you mentioned. If I have to list up the five, I think the first one, which is just happening this week, is what sort of a tension in between the US China will go into. Now they're having a negotiation this week. I think that will not only determine what the market feel like about the trade dynamic, about the tariff outcomes will be, but also was setting up a good example for the other countries and definitely will reshape our expectation for what's going to happen in early July. I think that's the number one. And the number two and three, I will be focused on the central bank. As I mentioned, the Bank of Japan and the FOMC meeting will take place next week. Certainly will attract quite a lot of attention. And just following that, I think I will also a bit further that it'll be the early July, we're looking into what sort of the final conclusion. While I personally don't expect an end result, but more likely, I think that tariff talk will continue drag on into the months ahead. And the last but definitely not least is from the mid of July until the end of July, we're going to have the US earnings seasons, the second quarter US earnings seasons that will present us a more comprehensive but also first-hand information about how the US business digesting the changing trade dynamic as well as what their views on the economy outlook will be. So all of them, I think they are all equally crucial for the investor to determine what their trading strategy and portfolio should be like.
And with those major events in mind, it's also worth highlighting two key central bank meetings coming up, the Bank of Japan and the Federal Reserve. What are markets expecting from these policy announcements, and how might they influence trading sentiment and strategy going forward?
Yes, as I did mention earlier, I think these two central bank meetings will definitely attract a lot of attention. They put this way, I think they both in a very, very difficult decision, but the position to making the final decision. The one thing in common is that both Bank of Japan and the Federal Reserve, they are sort of in a very delicate balance in between the economy outlook as well as the inflation. The only thing different is that for the US perspective, the inflation outlook is more uncertain because of the tariffs impact. Now the market is yet to fully price in what sort of this huge pack of a tariff will impact on the US inflation, unless that the central bank, the US central bank, is now at the, we call it wait and see position because they yet to confirm what the real impact will be. And that will definitely determine how many cuts they should be putting on the cards. Now at this stage, the market is only pricing in 1 to 2 cuts by about 25 basis points towards the end of the year. So in the upcoming meeting, we definitely will see that what they're thinking about this perception. And also, of course, for the quarterly, we also focus on what's something called the quarterly economy projection, which will show us what level of confidence the US Central Bank have for their economy. For the Bank of Japan, the story is a bit different. The inflation in Japan has been above their range for over 2 years. It seems quite steady, but the economy side is much more uncertain. The last week just reported Japan's first quarter economy sort of stayed flat. It's a sharply revised down from the previous quarter, meaning the Japanese economy doesn't doing that good entering into 25. So if the Bank of Japan have to move the interest rate up, they were taking quite a significant risk, is putting the economy at risk. So both of the central bankers I mentioned, they're all facing quite a big challenge in between working on the tightrope between the economy and inflation. But definitely both of them have their own unique challenge to face.
Looking ahead to the third quarter, what key financial events or economic trends are likely to shape the broader market narrative?
Well, I do expect that what we call the health check of the economy will be resurfaced to taking the center stage. Because in the first Q2 and Q1, it seems that from base economy data point of view, we're seeing the hard data, which often we're seeing the GDP or like inflation or services PMI, sort of like hard data stay pretty resilient. We're talking about the US economy point of view. But the soft data, which often we think will be sort of a price in the future risk, seems much softer. And I would expect this hard data and soft data were more aligned into the Q3 as market getting more idea about what this, the changing trade environment, the changing leadership, and all the changing global economy looks like. So the Q3 will probably we're seeing that more of the hard data was showing the change from the global economy point of view. Apart from that, it's definitely the Q3 is the time that the business will determine how much impact this, we call the tariffs shock, will impacting on the business, as they yet to fully pass on what the expectation, for example, pass on the price increase to consumer, pass on the budgeting or spending, change the pattern yet. I do think all this change will happening in the Q3, and putting all together will potentially putting more risk for the investment assets or potentially push up some more demand for a particular group of asset groups.
It's true that tariff tensions appear to be resurfacing. What's your take on the current state of global trade dynamics, and what risks or opportunities might this present for Q3?
Well, I think based on the update until I think today we still have 2 weeks left for the first half. What I see from the opportunities into the second half, I think will be the first one is that the investor have to make sure you do have quite a diversified profile, because we do see the risk and opportunities coming from quite sort of everywhere. And by saying that, I think there's 2 groups I have more confidence in. One is for the Asian currencies, and that's because on the one side, if you're looking for the economy point of view, the Asian currency seems to stand quite relatively stronger than the US economy or quite other developed economies. On the other hand, as we discussed earlier, the weakening of the US dollar appears to be quite a long-term trend. It probably won't be towards the end until the end of the year, because we are expecting the Fed will cut at least 1 or 2 interest rate by the end of this year, so which will making the interest gap even narrower towards the end of the year. So in that case, I do assume or expecting that there will be another leg for the strength of the Asian currency. Putting aside that, I think another thing that I will still keep on my radar is the haven assets, for example, the gold. I know everyone talking about it has been all-time high, has been up about 30%. But fundamentally looking at that, as long as the market continue to be volatile, we continue to have a more uncertainty than certainties, that appetite for the safe haven asset will continue to be there to drive the precious metal or other, not just gold, probably silver, that for even one further upside.
Turning to the Asia Pacific region, how are the Asia Pacific economies currently positioned within the broader global landscape, and what key trends are shaping the outlook?
For the Asian market, I think that as I discussed, I think the currency still have a bit of the potential, and that's because if you looking back into 2017 and 18 when Trump first introduced the tariffs, you've seen that during that period of time, the US dollar dropping roughly about 13%, and on average Asian currency up about 11%. But by today, the most of Asian currency only up about 4 to 5%. That's why I think there's still potential there. On the other hand, I think that given sort of quite changing trade dynamic, now the hurdles being pushed up for the trade into the US market, but for the Asian market, I think that given the diversity, given the quite a broad population here, we're still having Indian economy grow about 7%, China while slowing down but still 4-5%. So we still have the engine quite live and quite strong in the Asian regions to push up the equities value. And I think that quite diversity as well as quite a multiple forces will be the key strengths for the Asian markets.
To wrap up, how can investors approach potential risks and opportunities in the upcoming quarter? Are there any key theme or market developments that warrant close attention?
Well, I think the diversification is always the key. It's sort of quite an old-fashioned saying that, but if you're looking back into the first 6 months, as we just discussed at the first beginning, it's not only like the previous 2 years, only the US stock performs quite strong outperform any other asset. Instead, in these first 6 months, we do see the Asian stocks perform quite well. We do see the Asian currencies and the Bitcoins and the commodity market all have quite a lot of opportunities. So it's quite important to keep your minds open and looking into like a different asset groups that will potentially help you to build up more a hedge towards the uncertainties ahead.
Thank you for all your answers. Let's end this interview with the quick questions and answer if you want to. Sure. What's the biggest hidden risk you see in the second half of 2025?
Well, in terms of the level of the risk, I would say the bull market, as we have seen from the first half, that a lot of volatility is happening. It's unusual. A lot of things that happening, which is not quite normal if you compare to the previous pattern, which I think that will highlighting that this market is now getting into a quite dangerous level. And I think that would be the biggest risk for me.
Will Bitcoin break $120,000 or is the dream over?
Yeah, I think from my personal view, I think it's quite likely for two main reasons. The number one reason is that we continue to see the rising appetite for the cryptocurrencies, and Bitcoin, of course, the one that benefit the most. And the reason number one is if you're looking for the technical point of view, you can see that the uptrend for the Bitcoin stays pretty much valid. That is now sitting to this week, sitting above the 110, consider quite a strong support at the level. So I think that 120, as you mentioned, as a target is quite achievable based on today's technical indicators.
Which currency pair could surprise us in the second half of the year?
If broadly, I think the potential for Japanese yen is the most likely, given this they are the currencies with the most likely chance they will lift up their interest rate compared to the other currencies that will potentially cut their rates. Apart from that, I think the strength of Europe is also likely, and that's because last week even the ECB cut the interest rate by 25 basis points, but they also say that that's potentially be the end of it. So I'll say that the downside potential for the Europe is quite limited. Instead, I think the upside potential probably is just to start.
Gold is soaring, oil is wobbling. Who's lying?
Well, I would say that yes, I think I do see the gold has been pulled back a little bit because of the strength of the US dollar that's supported by the job data. But overall, as I mentioned, I think that given how uncertain and how volatile the global market, how unsure that we have about the trade, about the tariffs could be, I think the safe haven demand for the gold will continue to stay.
Last question, but not least, it's kind of our signature question. What would you buy? Yes, exciting. What would you buy if you were given $1 million right now?
Wow, that's a very big and expensive question to think about. I think back to that, I talk about. I think that as I mentioned earlier, I think diversification is very important. For this huge 100 million, if I have, I think I will putting them into at least like a 40% is high risk, but the 60% I think I will putting into probably low risk, but the long-term portfolio. And in the long-term one, I'll probably looking into for something like a quite blue chip, which I believe they will continue to grow. I think AI is continue a story will last for the next 5 or 10 years to come. So even there's a bit of volatility there, I think they will continue to stay and improve. And I will also looking at least 20% into under the safe haven shelter, gold, silver, even a bit of the Bitcoins, because I think that what their performance in the past 2 years has demonstrated quite a strong hedge in against the other volatilities in the stock market. For the rest of the 40 quite high risk one, I think I will also split them into like 50% of the US shares and another 50% potential in the emerging market like Asian market shares, because I think that will be help you to get exposure to different opportunities. So I think that that is a good story. It's quite a big portfolio to decide, but I think the most important thing is that you do have to get exposure to the growth opportunity, but don't forget to put in a safe haven shelters above your roof.
So if you had to buy one thing, AI mostly, just one thing.
If only one thing, I think that you can looking into the AI theme ETF. I know it's a big tricky answer, but I think that you can definitely looking into some of the ETF that will getting you exposure to the AI from the back end and the front end. The back end means that if there any infrastructure, the chips, or like the data center, which is supporting the AI's growth. But on the front side, I think there's quite a lot of opportunities were coming from the newly quite popular concept called AI agent, which I think that will be helping to reshaping our relationship with the technology fundamentally. So that's something that you can probably think about if you really into the AI topic.
Well noted. Thank you very much.
Thank you, Marion,
for this interview. Thank you all for watching, and see you next time.
Thank you. See you next time. Have a good day.
You too. Bye-bye.